Good evening, everybody. Thank you for joining us again today on I think this is our fifth education session. We are slowly making our way towards the end of our basic trading education course. Today, Adam's going to be teaching us about top-down trade analysis. What we will be covering in that subject is how to analyze your charts for the day, how to make a bias for the day, and knowing the importance of a higher time frame trend and using it in intraday trades. And with that, I will hand it over to Adam. Adam, stage is yours.
Yeah, thank you so much, Medrich, as always. I'm happy to see we have people piling up in our lives, which is good. Makes it more exciting. So yeah, our topic for today, higher time frame analysis, more like higher time frame top-down analysis. We call it top-down analysis because we start from the highest time frame based on the kind of trader you are and the fact that I mostly trade intraday, session to session. For me, my top will begin at the weekly, essentially. And from top to down, we're going to drop from the weekly down to the daily, to the 4 hourly, 1 hourly, and then plus minus 30 minutes. And at the end, towards the 15 minutes, I personally do not advise to go below 15 minutes, because the 5-minute time frame, and more so specifically the 1-minute time frame, is an executory time frame, and that's not meant for analysis purposes. You mostly execute your trades in either the 5-minute time frame or on the 1-minute time frame. So we drop essentially from the weekly towards the 15-minute time frame, and we see what we're going to be basing our bias on, where we expect price to be. And then other than the weekly time frame, I personally only go towards the monthly time frame, towards the start of the new month or towards the end of an old month, because that'll just show me that, okay, where has priced? Once again, we go back to our first lecture and it tells us where has the month closed. Has it closed into a key level? Has the objective for the month met or not met? And then where is the open of the new month, which will guide us based on where we will head up to towards the month. But again, if you're someone who trades Monday, Tuesday, Wednesday, Thursday, Friday, that is intraday, either London session or New York session, again, wouldn't advise anyone to trade Asia session, because Asia, as I said in the second lecture, we have 3 things that happens: accumulation, manipulation, distribution. You should not be trading accumulation, whether it is Asia or whether it is inside of 15 minutes candles accumulation, or 1 hour candles accumulation, or 4 hour candle accumulation, and so on, right? So we move on. I just want to get straight into live examples, because this essentially has nothing much to do with how to execute trades, as we had discussed about previously, including fair value gaps and order blocks and everything. This is more so of like structuring a bias and what we call ATA, or technical analysis of what we're going to be looking at when we enter towards a new week, and also to go back testing and see how our last week has panned out, and whether that the analysis that we made on Sunday has panned out towards the end of the week or not. So let's see. So our top-down analysis always starts from a weekly perspective, all right? And I will give you my weekly perspective for NQ specifically, because as I told you that I trade mostly futures. So going into this week, as you can see, we had a pretty indecisive candle. But again, you have to see that this is what? A weekly candle. And it doesn't matter how your weekly candle is, whether it has a big body or a long wick. It's just that you are more focused on what's happening inside that week, which means that you are more focused on what's happening day to day. And on day to day, you had, I'd say, wonderful opportunities on Monday, Tuesday, Wednesday, Thursday, and Friday, right? So again, don't be scared of how this candle looks like, because the way this candle looks like is personally exactly how I predicted it to be, right? So how do you start your top-down analysis? Again, we start with the week. And if you keep on looking at the week, NQ has consistently been dropping, right? We reach this particular area, and then we started dropping. And why did we reach this particular area and we started dropping? Well, I think that's something I'm going to discuss in the next lecture, which is based on it'll give us the answer, because I'll just say it now for briefly, because it took out this high, and it took out this high, and it also took out this high. So naturally, we're expected to bounce, right? So once we did bounce, started dropping down, and again, we apply our open high low close concept. As price closed below these lows, what would I expect for price to further go down? And exactly is what happens. But what happens before? Price just once again pulls back into what do we have here? Previous lectures, order block, and straight dump down, right? I'm just going to be referencing the previous lectures as well, just to get an idea and as to show that these things actually do work, in fact, and it's not just some random garbage, right? So if we look at it from the weekly perspective, and NQ has a structure shift towards the downside, naturally I'd expect it to fall down. But where would I expect it to fall down, and how much I would expect it to fall down on a weekly projection? Where would my target be? Where would I tell myself that, okay, now I feel like NQ has met a very big objective on the weekly time frame, and I would expect it to show some sort of reaction, and I would wait for it to show some sort of reaction at this particular point. For me personally, right here. Why is it right here? Because it's the only fair value gap that I can identify on a weekly time frame going in, right? And as you can clearly see, look at what's happened, right? Straight into that fair value gap. So this is basically how you go for week-to-week analysis. And in terms of, let's go into this particular week, this small green candle, right? So as you can clearly see, NQ has been dumping and dumping and dumping. And if you come to the previous week, that is this week, when this week's candle closes, what is it that you would expect, right? I was expecting price to close below this level. And if price has closed below this level, what would this tell me in terms of the open high low close? That I would be expecting to go even further down, right? But the fact, I was still expecting price to go there, to be honest, because of how the structure is on the weekly. But the fact that price on the previous week over here did not close below this level, that gave me a very solid idea that the next week that I'm going to be in would most likely have my objective met. And those were two objectives. One was price closing below over here, or actually not even if it's not closing, it's going to wick down through it. And I wanted price to reach into this yellow fair value gap, because for me that would have meant that my objective for NQ on a weekly would have been met, or the beginning of the objective being met had just begun, right? So naturally that would lean my bias more towards being bear or going for shorts into the previous week that has just gone by, right? So now I have a mindset on the weekly time frame that for the next whole week, that is this particular week that has just finished, I'm only going to press short. No matter how much of a good buying opportunities I do get, I'm just going to stick to my mindset, my discipline, that I want my time frame to be my objective on a higher time frame, that is a weekly time frame, to be met, right? So I made my mindset, and that's it for me. The weekly chart is done, and now as Monday started, or rather Sunday, because we have a small portion of Sunday as well, you just go down to our, let me just mark this for now. I'll leave this marked, right? We drop down into daily. Now, before you drop down into daily, you have to remind yourself that we have what? Monday, Tuesday, Wednesday, Thursday, Friday. And just as I told you that the sessions of Asia, New York, London, and New York has accumulation, manipulation, distribution, you have to remember that in terms of time, we have Monday, Tuesday, Wednesday, Thursday, and Friday. We're going to omit Friday because that's something I'm going to talk about later on when we combine everything after our basics have been completed. We're going to Monday, Tuesday, Wednesday, Thursday. So Monday is accumulation. Tuesday is manipulation. Wednesday, and most likely Thursday, is distribution. Or what you could say is Monday is accumulation. Your Monday to Tuesday transition is also accumulation. Your Tuesday to Wednesday transition is manipulation. Your Thursday and Thursday transition is distribution, right? Now, the fact that price previously week did not close below the level that I marked, and it came here, As I told you before, I expect price to go down, but that doesn't mean that, okay, Monday I press sell and just starts rampaging down. That's not how it goes. It has to meet those objectives of accumulation, manipulation, and distribution. So as Monday comes, I expect accumulation. And when I say accumulation, I mean that the candle of Monday is going to go and stand literally side by side to the previous week's Friday. And look at how exactly that's over here. You see here, Monday, and this is previous Friday. And they're standing side by side to each other right here. So that's your accumulation, right? And look at what happens. Look at the kind of confirmation I get on the daily time frame when Monday ends. Does Monday's low not break this right here, right? So that's confirmation enough for me that we are indeed going down. And even on a green candle, even though it's a bullish day, I would still press the sell button, because if I catch the top and I sell it all the way down towards this level, that's it. I'm with my bias, get my money out, and that's it. I'm done, right? So now let's have a look. Still bearish, hoping for price to fall into the weekly fair value gap. On Tuesday, when Monday is finished, what do? Tuesday, manipulation, right? Drops all the way down through the what do you call it? The low that I've marked over here, and closes below this low, right? So that gives me an idea that, okay, again, we're still meant to be going down, right? We're still going to touch our fair value gap weekly objective. But the fact that it's Tuesday and it's gone completely down and it's manipulation, this indicates to me that, okay, on a weekly time frame, this is a pullback towards the upside like this before we start rampaging down through this fair value gap and completely close below the fair value gap. So what does that do? That changes my bias for the remainder of the 3 days. I'm now going to go buy, right? And look at how Wednesday, Thursday, and even Friday does. We're in a complete buy program. Your Wednesday drops down into your fair value gap, meets the higher time frame point of interest, that is the weekly. It touches into the weekly fair value gap that I've marked in light yellow, and it starts rampaging up. This would have destroyed so many people, because they would have thought, oh, okay, it's reaching the fair value gap, and they would have just gone short and had their stop losses above, and it literally would have crashed through all of your stop losses. But if you think from a non-retail perspective, with a smart money perspective, the way I've learned, at least from ICT, is that the moment it touches the fair value gap, without any thinking whatsoever, press market buy, small contracts, and just take it towards the previous day equilibrium. And look at what happens. Exactly. Your price touches your fair value gap on a higher time frame point of interest. Your target has been achieved. The institutes have achieved their targets. And look at where price goes up. Exactly to the 50% or the previous day equilibrium. And that is, it's just fucking amazing, if you ask me, to be honest. And those are exactly the kind of things that I'm looking for in my top-down analysis, right? And then you look at Thursday, again, starts dropping low, fakes people out, starts rampaging up. Friday does the same, starts dropping low, drops towards Thursday's equilibrium, and starts going up. And it shows a complete and near perfect pullback of price on the week, which gives me an indication for the coming weeks that we are to be going down, or at least that's something I'd be expecting to go down, right? So this is how you do your top-down analysis from a weekly. The weekly will give you a bias, not necessarily before the candle opens, or rather never before the candle opens. You have to see where the candle opens, right? If we go down over here, where did the candle open? Somewhere here. So the fact that the candle opened here, it literally opened near the close of the candle, the previous week candle. At that point, at least for Monday and for Tuesday, I was completely bearish because of where the candle opened. And as you can see on Tuesday, it took out this low, and on Wednesday it even closed below it, right? So at least for these 3 days, I was still bearish, or rather on Tuesday and Wednesday. Yeah, on these 3 days I was bearish, and then on Thursday and Friday I was bullish, because on Wednesday, my higher time frame, that is the weekly point of interest and target, had been achieved. So I was bullish up until Friday, and it paid out. To be honest, it really did, and it will for you as well. As long as you follow these easy steps, because that's just how it is. Everything's right there in terms of price action and what do you call it, time. So if we go down and we focus on the specific days, so let's say we focus on Monday. So to focus on Monday, you have to see, which is again Monday. Before Monday, it is your previous week. So before, on Monday, you will have your top down analysis starting from the week. And on Monday, the candle, you see that the Monday's candle is open where it has opened. See, right at the close of the previous week's Friday. And the fact that I know that Monday is mostly accumulation. Oh, sorry. Yeah. So exactly. So Monday's open is close to Friday. Close to Friday's close, right? And since it's accumulation, I would expect the candle to mostly be just side by side only hands, and that's exactly what they're doing. But since I'm on the week, I'm bearish. On Monday, I would only press sell, which would mean that I would have capitalized on at least this much of a move. Yeah. Even if I had missed the complete body of the candle, I still traded the whole week. So sorry, the whole wick. If I just turn this off, I'll show you how much of a move you could have captured on a Monday by just going against the, again, towards the higher time frame. So that's around 385 ticks. And 385 ticks on 2 micros is $385 for the day. And 385 ticks on 2 minis, that is 20 micros, is $3,850. So now you tell me whether you want to trade the wick or the body. For me, it doesn't matter. I want to trade based on my bias, which was bearish. So yeah, it really doesn't matter. It's about how much you risk. You risk very less. For $385, you mostly risk $30, because that's how much my stop loss is. 30 ticks, 35 ticks, 40 ticks. So it's nothing, honestly. Right. So then from a daily, you drop down to a 4-hourly. So if you come to Tuesday, now you have a good perspective, because you're looking at Monday. Okay, how has Monday's candle shaped out? Perfect. My Monday's candle has done a complete accumulation, has been side by side to the previous Friday, and it's taken down this low that I wanted it to take down. But what did it not do? It did not close below. That's fine. It still wicked down, but it did not close below. And since Tuesday is manipulation, I want to see where the Tuesday's candle opens. And look at where Tuesday's candle opened, right near the Monday's close, right? And that gives me a very strong indication that I want to dump straight down through this right here. Whether I close or not is something that I'll know once Tuesday ends, and then I'll be able to make my remainder of my week's what do you call it, bias, right? So once again, just as Monday, on Tuesday I'm bearish, right? Candle opens, does not even leave a wick up, right? Does not even take Monday's high. It just straight up dumps, right? And if you're bearish, even if you don't catch the top, you catch it anywhere other than the top. Look at how much of a move this is. 1131 ticks. Even if you catch it from somewhere in the midpoint, that's still 700, 650. That's a lot, right? Again, the same way, let's go to Wednesday. Where did my Tuesday's candle close? It closed below this level that I was hoping for it to close. Now, what's my next target? My next target is literally my week's target, which might be achieved by Wednesday. And look at what Wednesday did. Exactly over here. Tipped in. Even though it's a bullish day, I'm still short. And if I'm still short, I capitalized on this low-hanging fruit. I don't want to be in here somewhere. I just want to be here. 388 ticks. But since I know how to read read price action in terms of time. The moment my Wednesday's daily candle wicks in to the fair value gap, I will be looking to go long. Why? Because the sell side objective has been met on a higher time frame. So if the sell side objective is going to be met, what's going to happen? Sellers and buyers are going to shake hands, and your buyers are going to be activated. And then look at what happens if you catch the low over here. Even if you catch it from here, it doesn't matter. Look at this. Boom, 772 ticks. Now Wednesday's candle close for me is more than enough confirmation that at least for Thursday, I'm going to be going up. My manipulation on Tuesday right here is over. Wednesday transitioned from manipulation to distribution. And then Thursday completely Tuesday to Wednesday, I transitioned to manipulation. And then Wednesday to Thursday, completely going up. And that's exactly what Thursday does. And look at where Thursday's candle opens. Right here. Where Wednesday closed. That's more than enough indication for me the price is going to be going up. If I draw my fibs, as I told you, from here to here, roughly, what does it do? It takes out the previous day equilibrium and just starts rampaging up, right? And if you take the low, what would I target? I target the equilibrium of this. That's my target. Simple. And then obviously Friday, I told you, is a different discussion, so we're just going to leave that up. So this is how you frame your weekly objective and your day-to-day daily candle. Before Tuesday starts, say at 6 o'clock, it starts. Wednesday starts at 6 o'clock. Before that, at least an hour or half an hour before that, you come and you analyze Wednesday on a daily time frame. You just look at the weekly candle and you tell yourself, okay, this is where I am on the weekly. My objective is nearly being met. It's going towards that side. I'm confident in being a seller for this week. And then you come and you look at Tuesday. Okay, so Tuesday is a very, very bare day, but it didn't touch my weekly objective. What's Wednesday going to do? Most likely go a bit up and then rampage down. Doesn't matter. I'm still selling. I still want my weekly objective to be met because look, Tuesday almost met your weekly objective. Just missed it by 145 ticks. So I expect Wednesday to meet my objective. Even though if Wednesday is a bull day, I still expect my objective to be met. And I'm going to be selling short. And that's exactly what happens on Wednesday. And to be honest, if I were you, I'd be done for Wednesday. I'd go spend some time with my family on Thursday and Friday because that's my objective for the week has been met. If my objective for a week is met on Monday, that's it. You should just get up and be done because that means that Tuesday, Wednesday, Thursday, Friday are going to destroy you because you don't have any objective. Okay? That usually doesn't happen, but still, just for the sake of it being happening. So let's so that's what you do, right? If you are in Tuesday opens, and you've analyzed Monday's accumulation, it's side by side to the previous Friday. How would I take a trade on Tuesday? Right, so that's when you drop to a 4 hourly. When you drop to a 4 hourly, this is something that you're going to be seeing, right? So we are here basically. We're in these candles because this is Tuesday, right? So I've seen Monday very choppy, as you can see on a 4 hourly. It shows you very cleanly that it's choppy, but you can still catch this choppiness. How? If you've analyzed the daily, right? So now we move on to the 4 hourly. So the general consensus is let's go here. So look at where it starts. Right above, and it's just dumping. The whole of Tuesday is just a massive dump, right? Let's say by the time you wake up, you get onto your chart, so you've missed all of this move, right? You have missed it, right? It doesn't matter. It's actually good that you missed all of this move, right? Because why? You shouldn't be actually executing on a 4 hour. This is just for the sake of top-down analysis. If you come around somewhere on this candle and this candle opens, and let's just say you don't have any of this, right? You don't have any of this. You're just basically right over here. What is it that you would be looking for? I would be looking for this. What is this? Is this not a bearish order block, right? Is this not a bearish order block that's formed? Let us label this. Let's label this as an OB, right? And as I told you in the previous lectures, when you have an order block which has a very long wick, I would generally consider that wick, at least on a higher time frame, to be an order block, right? And then what would I do? Since it's a long wick, as I told you in the previous lectures, what would we do? We do this, right? And look at what it does. Pierces through the 50%, right? Obviously, you're not going to take a trade, but this would be what I would be looking for going into my lower time frames. And so if I mark this, just mark this over here. This is my order block, right? If I'm not sure what is going to happen in terms of my trade on a 4 hourly, if I'm not getting a clear picture, if I'm getting something like this, which is a big candle with a big body and a big wick, I don't know what it's going to do. You drop down to a 1 hourly to refine. It'll help you refine your order block even more, right? So if we drop down, now you can clearly see what's happening, right? Then you will remove this. Now look at this. Rejection, 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 final rejection, straight dump down, right? And where is it rejecting from? This whole order block right here. Consider this whole thing as an order block, just by the way. If you have consecutive green candles, you'll consider the whole thing as an order block, because this on a 1 hour is basically just, on a 4 hour, this is just these two candles on a 1 hour are basically just one whole candle on a 2 hour. Remember that. Okay. Let's go back. See, one whole green candle, I bring it out on the 1 hourly, it just becomes a single order block essentially, right? So now I still favor this 1 hour order block, but it's just a matter of me telling myself, where is it that I'm going to go short from? That's where I drop down to my 15-minute time frame. Refine it even more. Keep on refining it until you get a very probable answer. Where's my Tuesday? Lost my Tuesday. Oh, it's right here. Is it? Yeah, this was my Tuesday. Look at what I get. Now we're on a 15-minute. Again, as I told you, green candle, green candle, green candle, green candle. This whole thing is an order block, right? Let me mark my order block. Sorry, this is also my order blocks right here. Turn on this. Yep. Now I can see price rejecting off of this order block. Okay. But what is something else that I see on a 15-minute time frame that I can make myself wary of, right? Is this, what is this? Is this not a fair value gap? Right? Now what do I have? My two most strongest confluences, an order block with a fair value gap. Yes, they're far apart, but it doesn't matter. It's because they're just multiple candles forming a single order block. Do they not? Right? If I remove this and I do this, look at this. Picture fucking perfect. Goes to the 50%. Does it close above the 50%? No. It rejects twice off of the 50% and at least 6 times inside the fair value gap. Right? Right. When I first started learning all of these things, when I do something like this, I would just like stargaze and fanboy for like 10 minutes because, yeah, I thought all of this was just random bullshit. So, yeah, you have a fair value gap, you have an order block, you mark through the 50% and look at how it beautifully rejects off, right? What do I do next? You can either just, if you have like, you're fearless, you can just literally press market or set a limit on the 50% pip. But since you're on a 15 minutes, then your, your stop loss would be a bit too big. If you can see here, if I try to go short and I place my, I went long. I place short over here. Based on the trading rules, as I told you before, you should have your stop loss above the fair value gap structure. So that's a 67 tick stop loss. I think that's still somewhat reasonable, but only if you're someone who's been trading for a while and you have some capital. Because 67, it'll still be at the end of the day $67, right? And again, where would my target be? Let's go back over here. Wait in Tuesday, right? So if I catch this, my target will be over here, right? So we go down. I wouldn't be a big shot and target the fair value gap. I wouldn't, honestly. Those is not my expectations. Target this right here. This is my trade. This is one out of the 2 trades that I will take on a Tuesday, right? 5 to 5 risk reward ratio, 346 ticks. That's $346 or $3,460, depending on how much you want to risk, with a 67 tick stop loss. So I think that's very reasonable. One out of the 2 trades that you will take. Round it off to 350. If you take 2 successive trades like this, that's $700. That's more than enough in one day. I personally don't know many people who earn $700 a day, other than those who trade. Yeah. So you can. This is basically how you do your top-down analysis. Your more specifically, your analysis phase is your weekly, your daily, and your 4-hourly, and to some extent your 1-hourly. You use your 1-hourly when you cannot find something on a 4-hourly, just as how I did. You can see on the 4-hourly over here. For me, this order block is very big. It's a very big order block. Honestly, if you do this, this is a 400 tick order block. That's pretty stupid. So I come down to the 1 hour. I try to refine it. See, do I get refinement? No, because I have a very big order block with a very big fair value gap. Drop down to a 15-minute. Does it help me? Yes, it does, because now I have a small order block, even though I have a big order block, but now I have a fair value gap that's very close to it, and it's a pretty small fair value gap, right? We do have a fair value gap here, but this is something I'm going to talk about later on, to be honest. I don't want to bring in too many things. So yeah, see, you would have had your TP taken off and candle literally blown through your take profit without taking any partials, to be honest, because how much is this? 1, 2, 3, 4. 1, 2, 3, 4. It's 2 hours, 2-hour trade towards the bias, towards the right bias that you had mapped out based on your top-down analysis. So that's your Tuesday, to be honest. Take 1 trade, be done with it. That's it. Let's have this removed. In the same way, if we transition from Tuesday to Wednesday, if I want to take a trade on Wednesday, how would my top-down analysis be? So again, if you come down to Wednesday, you're going to look at 2 things. You're going to look at the weekly candle and how the weekly candle is forming. Is it going towards my weekly objective? Seems like it is. Then you will look at Tuesday. Where did Tuesday close? Tuesday did close below the level that I'd marked somewhere over here, if I'm not wrong. And it closed below it. Let's actually mark it on the daily. So that's fine. So Tuesday closed below it. Now I'm definitely bearish, right? Because even though it closed below the candle, it almost met my objective. So what do I expect now? Always remember that institutes, as I told you before, they have their orders placed in batches. They don't just straight dump and straight pump. It doesn't work like that. It tries to dump down towards the weekly fair value gap, doesn't meet it. What does it have to do? It has to go up to shake hands with the buyers again, pair their orders and drop down. And that's exactly what happens. And that's exactly, if I know that that's going to happen, I just have to seize the right opportunity and take the right sell button at the right time. So again, this line that is highlighted gives me a very big indication that we're going to pull back a bit on Wednesday, and then we're going to straight dump. Or at least that's what my expectations are. If it's not being met, it just means that I did something wrong at a particular day, or my whole TA or price action is just wrong. And you look at what Wednesday does. Pump up, giving an indication to retail that we're just going to keep on rampaging up. The moment you press your buy button, it will literally die down on you. Take your stop, right? And then you will curse at yourself and tell yourself that this shit is just not how you want it to be. But if you know how to do proper top-down analysis, you're literally just going to be quite literally just riding the waves on autopilot. That's it. So look at what Wednesday does. I expect it to go down, but before I expect it to go down, I just expect it to pump up a bit before it drops down. Now, personally, if I look on a 4-hourly, I don't see anything favorable to take a trade on, right? So drop into the 1-hourly for Wednesday. Now, what is it that I see over here? I see two things on the top of my head. I see my order block, and I see my fair value gap. Look at what it does. It tips its hands into the fair value gap. Why doesn't it go above? Because there's an extreme selling pressure, right? It doesn't close again above the 50% of the fair value gap. I think you can just see it with your eyes now. And then it just straight dumps down, right? Again, wouldn't want you to take a trade on the 1-hour time frame. So we shall just, so this is something I would have just marked out and left on Tuesday. And then as Wednesday candle was forming, and see how price is going up, 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 up. See, again, it fails to reach the fair value gap. So it just dumps down to grab more what do you call it, just to activate more buyers, and then finally reach up. And then on a longer time frame, on an institutional time frame, because your institutes, remember, they trade on the weekly and the monthly, on the very, very high, on a yearly time frame. They don't trade on 15-minute, 4-hour, 1 hour. That's not how it works. So comes down on a 1 hour, buyers activated just to go up, so that on a longer time frame, the sellers can grab their what do you call it? The sellers are activated, so it just straight flash dumps down, right? So I mark this, and then when the time comes for a price to come around near this fair value gap, I will just sneakily drop in into a 15-minute time frame, right? And now on a 15-minute time frame, when I am at this particular point over here, what do? I see something interesting, so I remove all of this, right? Remove all of this. What do I see over here? Is this not my order block? And is this not my 15-minute fair value gap? Small as it may be, it's still something I would hold a lot of significance for, to be honest, in all honesty. And look at what it does. It'll turn on, and this is where I want to show you something really nice. I want to show you how it will always be your bodies that will tell the narrative, and it'll always be your wicks that are going to do the damage, because it's going to be always the wicks that are going to be grabbing the retail stop loss. Always remember that. And it'll be something that it'll stop you out, just as how it mostly stops me out as well, the wicks. Because I'm scared of having a big stop loss of like a 60 tick or something, right? Because again, for me, it's what I risk, not what I earn. So you see fair value gap, a bit too high up for me, even though it's a very long wick, but I will still do this, right? Look at what it does. Even though, all of your bodies are in the 50% fib of your fair value gap, and it just wicks out twice, right? And the only reason it wicks out is that it can basically reach into the order block that I've marked. So you can either have your limit set at the 50% of the fair value gap, or you can have your order set at the low end of the order block that actually forms the upper end of your fair value gap, right? Or more so, preferably, you could just wait. Sorry, you could just wait for your candles to wick into the order block, and then you can just drop into a 5-minute time frame or a 1-minute time frame to actually take a trade. Now, I ideally wouldn't want to do that and don't want to show it right now, because this is something I want to keep for the later lectures, where I'm going to explain how you can be taking a trade. Like, how would you take a trade when your objective has been met on a 4-hourly or a 1 hour or 15 minutes? Like how to set a limit, how to wait for certain things, essentially how to take a trade, That's something I've kept for later on, right? But if we look over here, actually, I shouldn't remove that, to be honest. Go back. Here we go. Can't go that back. Let me just draw those things again. Where'd you go, man? Yeah, right here. Right? And then I drop to the 5-minute time frame. Yeah. So you see, price goes into it once, twice, and then tips into your order block as well. So this would have been a testing day, right? But to be honest, I would prefer a fair value gap because the lower end of the order block on a 15-minute makes my fair value gap as well. So I would set a limit on the set a limit on the 50-minute of the fair value gap, 50% fib on the fair value gap. And then I would do this. And to be very, very sure, as my first attempt, I would put my stop loss on the 50% of the order block. That is the above 0.5 fib. And look at what happens. It fills you in, comes down, goes up once more, right? Pretty sure you would have shitting bricks by that point. Taps into the order block. See how it doesn't go above the, or even touches the 50%. But my focus is on the fair value gap. I can see how clearly the prices, the bodies are respecting the 50 time frame, or the 50% fib. That gives me more than enough indication that, okay, I have to stick to my bias and I have to stick to my trade. And then look at what happens. Flash dump. And then you're done. Because when you catch the top or the bottom of the day and you take profit at the objectives, that has to be met for the day. Because just as you have a weekly objective, you have a daily objective. And my daily objective has been met. Why? Because my daily objective was my weekly objective. And I'd be done on Wednesday, to be honest. So this is essentially how you could use your top-down analysis in a trade, right? And in the same way that you can use a weekly weekly time frame to highlight trades, you can also use a daily time frame. And it brings me back to the fact that I personally trade day to day, my bias is again top-down analysis, but it is day to day, which means that I trade Monday, or rather you would trade Monday. You would trade Monday based on a weekly time frame, right? In conjunction with the daily time frame. I would expect Monday again. If Monday hasn't opened yet, I would look at Friday's candle. I would look at this candle right here, and I would tell myself, okay, based on the open, high, low, close, how would we fare? If Monday takes out the Friday's low, I will long. If it takes out the Friday high, I will short. But the fact that we're so close to our daily objective, weekly objective, which is right here. I accidentally removed it. The fact that we were so close to our weekly objective, I had my weekly goal in mind, and I trade daily based on that, right? So my weekly objective was sell. So I would at least have an idea that on Monday, I want price to go up or be somewhere around the midpoint of Friday's wick. And then I would go short. And look at how it perfectly delivers, right? Monday, Friday goes, price goes to the midpoint of Friday. Why Friday's wick? That is the previous day equilibrium, you could call it. Because on such a day, I would consider the wick, not the body, right? And on days where you have a big body and a small wick, like you can see on Tuesday, I would consider the body and draw my fibs from that on a higher time frame, just by the way. On a lower time frame, I would only do that for order blocks. So look at what price does here. I look at Friday and I tell myself, okay, I'm bearish for the week. I want price to reach up to Friday's midpoint, that is previous day equilibrium. Then I want to sell short, and that's exactly what it does. Comes to the previous equilibrium of Friday's wick and goes down to take down Friday's low. That's it for me. Monday's done. But I also keep in fact them over here. What is happening over here? Objective still not met for the week. Still going short. If I'm still going short, I want price to open somewhere around Monday's high and either take the high and then dump down. And look at what it does. This is your Monday's high right here. It didn't take it, but it starts rampaging down. So somewhere along over here on the midpoint of the midpoint of the Monday's body, I would tell myself, okay, I don't think this is going down up further, and it's probably not going to take out Monday's high, and it's just dumping down. So I always still want to sell short at any given moment. And that moment for me would be either a 4 hour, 1 hour, 15-minute order block, or fair value gap. That's it. If it goes right, it goes right. If it goes wrong, that's it. You're permitted to have one more trade with half the contracts opened. That's another rule. You start trading, you trade with 2 micros or minis. It fails, your next trade should be 1 micro or mini. You half your position size and you half your take profit as well. That's essential risk management for you right there. If you lose more, you should be winning less on the next trade as well. There's no need to be a hero. So again, on Tuesday, I see that at least one part of my objective is met. Price is close below this structured low, which means we're definitely going down. So going into Wednesday, what do I expect? I expect price to go towards previous day equilibrium again and drop. Doesn't happen? Fine. Somewhere along Wednesday's wick, somewhere along here, I will tell myself it's not going up even more. It's going to go down. What do? Now I have to take a short somewhere where I have an order block or a fair value gap on the 1 hour, 4 hour, 15-minute time frame. Yeah. Even if we do this, we take the whole day. Okay, then it makes sense. But again, I stick to my principle, so I will take this. And it'll show me that it tried to reach there and it failed. It'll go down, and that's exactly what it does, right? But on Wednesday, again, look what happens. So again, one thing I want to add before I end the session is that every day you have a bias on both sides, which means you have levels marked on both ends of a daily, 4 hourly, or 1 hourly chart. You go down to your 15-minute when the day is active, or at least that's what I do. That's the chart that I look at, right? If I have something at the lower end of the chart, fair value gaps, order blocks that I wanted to touch, I mark those. The same way on the opposite end, on the upper end, I have fair value gaps, order blocks. That gives me my bias. If it goes down and touches this fair value gap / order block, I will press long. If it goes up, I will press short. Since I'm bearish on the week, I want price to go towards a more discounted, more premium fair value gap and order block, so I can press the short button. And Wednesday is a perfect example, right? Where price on the day is bullish, if you can see. But what does it do? It first takes down and comes down into your weekly objective and then just rampages up. And that's how basically you adjust your narrative. You have narrative and bias towards both sides. You have levels marked on both sides in the form of fair value gaps and order block on a 4 hour, 1 hour, 15 minutes. And on Wednesday, price straight up dumps down so that for the week, the institutions have met their objective, right? So I go short because I look at price dumping down and I tell myself, okay, it's going towards my weekly objective. I want to press short. I'm not going to wait for it to go down, which you can. It's perfectly normal for you to wait for price to reach into the fair value gap so that you can press long. Because I feel like that'll be even more smart and safe, because in that way, rather than catching this, rather than catching this, or rather this, you have a chance to catch this, which is an even bigger fish. So that's how you should be having your narrative both directions towards the day, right? And I'm glad an example like this came up, to be honest. Then we drop towards Thursday. Now that I know that on Wednesday my objective for the week has been met, now I'm bullish, just how I was on even Wednesday. If I took the short and I see my what do you call it, higher time frame objective on the week being met on that day, even though I'm bearish, I will press long directly and just look at what it did. Then you move on to Thursday. What do? You go to weekly and see what's happened. Oh, my weekly objective has been met based on my top down analysis. And look at Wednesday. This is how Wednesday was. It was bullish, indicating that we're going up. Why? Because our weekly time frame objective has been met on the sell side. Now I will look at how the daily candle opens and look at where the daily candle opens for Thursday, right where the Wednesday's candle is closed. What do I expect? Expectations should be on one side, narrative and biases on both sides for the day, because you mark your levels for both sides of the day. My expectation on Thursday is to go up, but it'll only go up after it comes down. So I mark my level on the downside and on the upside. Whichever way it goes, I take the trade opposite side. And by opposite side, I mean more so specifically and hopefully towards my narrative and bias, my stronger narrative and bias for that particular day. Why? Because my weekly objective has been met. So now I'm solely trading on previous day's biases, right? That's something I didn't do for Monday, Wednesday, Thursday, Tuesday, and Wednesday. I was solely bearish. But now that the bearish objective is complete, I'm going to be going based on Wednesday's narratives. And that's the same for Tuesday. Comes down, pumps up. Friday comes down, pumps up. And that's it. Your week's finished. And so is this lecture. So yeah, that's basically what top-down analysis is in a nutshell. Start from the week. Only go for the monthly when a month is finished or a new month has opened, just to see where the monthly candle is open and where the monthly candle is closed. Because your open, high, low, close concept, or rather all of your concepts and the things that I've talked about, they apply to literally every single time frame, even the yearly, bi-yearly, decade, millennium. It applies everywhere. So you start with the weekly. You have a projection of the week. Okay, I'm expecting this week to go down. So naturally, I would expect the start of the week to go up, right? And that's exactly what happened. Over here, just the objective was met on Wednesday, which is somewhere in the midweek, right? Or if you negate Friday, it literally, you're again, midweek, Monday, Tuesday, Wednesday, Thursday. And then for Monday, you look at the weekly candle and you look at the previous Friday. For Tuesday, you look at the weekly candle and you look at the Monday. For Wednesday, you look at the weekly candle and you look at Tuesday, and so forth until you reach Thursday, because Friday is a bit different. I'll explain that later when we basically dive down a bit more deeper into things, right? So yeah, that's how you do your top-down analysis. And again, your top-down analysis is something that is based on two fundamentals of tradings: x-axis, y-axis, time and price. That's pretty much it, to be honest. So yeah, that's it. We're done for the day with the lecture.
Thank you very much, Adam. Once again, as always, very informational and very kind of insightful as well, to be honest. It's interesting to see how these biases actually work. If you had asked me before, I've heard this and saw this in action, I'd probably say that it doesn't exist or it's just a scam. But it clearly does work, doesn't
Same
it?
here, man.
Yeah,
Here.
it
Yeah.
clearly works.
Mm.
Does anybody have any questions? That's really good to hear, Slamurai. As always, I mean, the idea is to just kind of spread awareness, to try and get people to think for themselves. It's important, I think, rather than just blindly following random calls and stuff.
Yeah, I guess it's always good to learn these things by yourself, man. You can literally become your own asset, and that's a really good thing.
I think Glenn is typing something. He might have a question.
Yep.
Rosie has a question. Rosie, what do you want to ask? Oh, look up. Yeah,
Look up.
read above Slammerai's
Oh, okay.
post.
Look up. Oh, is this? So can you also discuss what you will look for in the coming week? For example, are you looking for another opportunity to short, and if so, would that be at a discount point of Friday's wick? Was this asked today?
Yeah.
What do you look for in the coming week? Yeah, so the coming week, to be honest, based on how like the economic status of the world is, or okay, let's just set aside the economic status of the world. Let's just focus on price action. To be honest, and you have look at your structure, right? Oh my God, what am I doing? Look at the structure right here. Yep. Completely bearish. Now, personally, in my opinion, I want price to come and fill up this fair value gap. Like in my honest opinion, I'm only hesitant. Why? Because we haven't closed below this structure low. We've only wicked down. So I feel like the next week or so might be a bit weird. But that's the thing, right? The fact that a week has not opened, or the week hasn't ended, or we're not in midweek of the next week, I can't really say for sure. But my expectation would be for us to at least very soon come down and reach for this fair value gap. Again, based on how institutions work, it's not that I've said it and the next week straight up dumpage, right? But I want to first see price close below this level of 14805.25. Then I can say, okay, if it does that on a Monday or a Tuesday, then I could definitely say we're coming down for that fair value gap. But on the longer term, I personally am looking for price to come down, right? But yet again, my eye goes to this. And as I told you, 2 weeks, two sides to the narrative, upside and low side. And currently, this is what, just by looking at the chart, these are the two things that you can look at, right? Order block and fair value gap. If it goes up, it comes down. If you look on the downside, fair value gap, if it comes down, it goes up. Similarly, since there's no order block, there's no order block down here, I would be looking at 50% of this what do you call it, fair value gap. Just so you know, are you still recording, right?
Yep.
Okay, just for the sake of the lecture, now that we've discussed order blocks and fair value gap, for you to know that the midpoint of a fair value gap is called a consequent encroachment, and the midpoint of a candle or a wick is called a mean threshold, right? So as you can see, and from here on, I'm just going to be using those terms. So on the downside, I'm looking at the consequent encroachment of the fair value gap. If it gets pierced through and candle close below, definitely going down. The same way on the upside, if we close below the 50 pip of the upper fair value gap, would expect price to go down. I can't predict what's going to happen, but I'm looking for the downside. I'm expecting downsides, but only confirmation will be given after these two levels have been touched, grabbed, and the same OHLC. But currently on the weekly time frame, these are the two levels that I'm looking at, and this is something that's going to shape my bias towards one side somewhere in the midweek.
So basically, your bias is towards the downside, but you would wait for a confirmation.
Always.
Yeah.
You always have initial bias, and then you mark your levels, and you tell yourself on the upside and downside that this is what I'm looking at.
Yeah.
But you look at the structure, right? The structure shows lower lows and higher lows. Lower lows and lower highs. So it does seem like we're going a bit down. But again, you have your open, high, low, close, and your fair value gaps to give you extra confirmation. Yeah, so you do have a fair value gap up, right? And look at this week, it made that fair value gap. So now we're going to see whether we go up to tap that fair value gap, which would make sense because you're just going to form another lower high, right? If you look over here, you'll just make a lower high, or even a bit over here, might wick up, but the candle body close below, and then you might do this, right? Seems logical based on the structure. See, continuation. Yeah, makes sense to me, to be honest. But remember, this is a weekly time frame. So on some days of the week, you can be bullish, and that's something you're going to be denoting based on the previous day. You know, documentation. No, to be honest, I'm not the type to document anything. I just solo ride doing this thing. It's like, as I told you, come an hour or half an hour before the new day opens and you do your analysis, your market levels, and that's it. You set your alarms, because I feel like, and it's gonna upset a lot of people. I feel like trading should not be consuming majority of your times on the chart. Trading should be the only time trading should be consuming your chart. Sorry, your time is when you're on the chart to do some pre-market analysis, or when you're on the chart or on a specific time of the day. That again, I'm going to talk in the next lectures, the coming lectures, the last couple of lectures that we have left. Trading should only consume your time if you're doing a pre-market analysis, or if you come on a very specific time of the day where you expect price to reach the particular levels that you marked during your pre-market analysis, so that you can come and take a trade, see it go in your direction, set your stop loss to break even or very, very strike profit, and just go about your day, to be honest. Yeah. And set your parcels, of course. That's how trading should be for someone who knows what they're doing. Because if you're sitting and just 10 hours, you're looking at the charts, it's like that's stupid. Your focus, you lose focus after an hour, to be honest. And that's coming from someone who's been a med student. You lose your focus. So that's not good, because this involves day-to-day money, and you don't want to lose your focus, because then you'll be losing money. Yeah. Spend less time on the charts. Quality over quantity, as always, applies everywhere. Thank you, Rose. I appreciate it too.
Great, that was excellent. Thank you very much, Adam. Thank you, everybody. Just remember, we'll be back here next week. I'll announce the next date and time. And any questions, feel free to tag Adam in chat, in between sessions, no problem. Okay?
Yeah, sounds good, man. Anytime. I answer questions anytime.
Great. Well, thank you very much, everybody, for attending again. I'll be uploading the video shortly, and I'll release the next few chapters that are left to discuss in the coming weeks. And then I'll slowly explain what the strategy is moving forwards once we're done with the basics of trading and TA. Hope you guys have a wonderful rest of your weekend, and any issues, just give us a shout. Bye-bye.